Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
Hey, what's going on, guys? This is Brinks Trades coming back to you live with another week of breakdowns. I don't know what happened to my banner this week. It's a little bit different than it is. It's weird. Okay, anyway, so Brinks Trades. Hey, how's it going, everybody? Hope everybody's having a good week, having a good weekend. Had a good trading week. I am the resident indices analyst for the Trading Up podcast, if you don't know me. And so every week I come on here and I basically do break down the charts for the indices with NQ, ES, and YM. If you're a Forex trader, those are going to be NAS100, the US500, and the US30. And then also some currency futures as well. So again, Forex traders, you guys will recognize those: Euro USD, GBP USD, and etc. So you guys know my backstory. I've been a day trader for about 10 years now, and 10 years as of this year. And yeah, it's been a crazy ride. I started in Forex, made the transition to indices a couple of years ago, and it's been pretty much up really ever since. So again, let's go ahead and get into the charts. But as usual, I love seeing people call in from different places in the world and different places in the country. So feel free to drop a message in the chat. What's going on, Hugo? My guy, Hugo. That's a mentorship student right there. I swear, every time I'm in the live, doing the live trading, Hugo is in there listening and watching. And, you're definitely got to watch out for him. He's going to be a crazy trader. It already is, to be honest. But, okay, let's go ahead and get to the charts. Dollar index. So you guys know me by now. You know that I use dollar index as a barometer to kind of get a better understanding of everything that goes on in the currency space, and then obviously the indices as well, because dollar is king, right? So if we understand where dollar is going, then most likely we're going to be able to form a better understanding of where the rest of these markets are going to go. So a couple of things happen. I'm going to start in the daily time frame, right? And so last week there was a couple of things that I wanted to see happen, and the first thing, let me see if I get the right chart up. Boom, right here. So last week when we came to the terminal, or I did the call last week, I said I wanted to see the market really reach up here. And I gave the disclaimer that because we are in a bull trend, or we're in an uptrend on the weekly and at that time the daily time frames, that even though we wicked off of this level, I can't fully call bearishness until we get some type of like rejection, break of structure, etc. Right. And so coming into last week, I had this level right here at 108.43 as an invalidation level. Right. And so basically saying that if the market came down here and took this level out, then we probably would see a continued trend downward. Also going to the weekly time frame, what I also made the note of is that we had this unmitigated fair value gap right there, right, that we could potentially trade into. Not only that, but just the fair value gap with the order block too. So what we pretty much got was a break of structure on the daily time frame down into that weekly overall level, which is sitting right here, which is also has a daily fair value gap right there too. Let me go ahead and draw that out for you guys. So yeah, so we had all of this, and so going into next week, what am I looking at on dollar, right? So we this is clearly a shift in trend, and so this is one of the trickier things in trading when you get a lower time frame. In this case, the daily is the lower time frame in comparison to the weekly, but a lower time frame break a structure back to a area of weekly liquidity, and so a lot of times these are going to be the times where you could get faked out in the market, right? Because you see this higher time frame break of structure, you're like, oh, bears are here, like it's bearishness, right? Like let's go ahead and keep taking this down. But we traded back to this higher time frame, uh, pretty much level. And so how I trade these usually is, or how I kind of look at these situations is, I always go with what the higher time frame is telling me because that's going to be the truest trend. And because we are bullish still on the weekly and we came back to an area, I would want to see this reject and go higher. Right. And so what I would be looking for is some type of 4 hour or daily break of structure that would kind of cause that trend to go back into an uptrend, right? And really start going after that buy side liquidity up at the highs. Um, until we get that, I'm probably not going to participate in any type of trades on honestly any asset. But if we don't see this level respected, I will be cool with hopping into pretty much shorts after we take out this weekly low, right? Or if we fail to disrespect this fair value gap here. So these are the two levels that I'll be looking at. But ideally, there could be short opportunities on the daily time frame, and I guess the smaller time frames as well. If we invalidate this fair value gap, so if we close below this, then I'm looking to in this between this low and this low, or this level at 106.75 and 105.05 to take shorts. But as of right now, again, I'm sticking with the bearishness idea that we at some point will transition. So what I'll be looking for this week is really just 4 hour breaks of structure back into the alignment with that overall uptrend. And if we don't get that again, I'm definitely going to be bearish after this 105.5 level. So and if we get a weekly break of structure, this could really set the stage for a longer term kind of trend where we're trading back, down a ways. Right. We could even find ourselves coming back down to this zone down here, right? Or something like back down to this unmitigated fair value gap, or this order block down here. So there's a lot here that we could be uh looking for as far as shorts go. But as of right now, I gotta stick with the long bias. And if you want to take short-term shorting opportunities, right, because the market is still giving us bearishness, then be my guest, right? Feel free. I'm just a big fan of bigger plays. And so I think the level that I really will be looking at here on the 4 hour time frame is, how do we react to this fair value gap on the 4 hour right here, right? Do we mitigate this? Do we mitigate this and respect it, right? Like something like this. Like that, or are we inverting it, right? And if we're inverting that zone right there, then that's kind of like my signal that everything is going to kind of be going back to normal for more long opportunities, right? So I think this will be the key zone right there on that 4 hour. So I'll put, as of right now, I want to see this inverted, but I will be looking very closely at this zone right here to see how we react to that level. My students know that I'm not a huge fan of counter trend trading, right, on the daily and weekly time frames. And again, when you see these time frames that are giving you mixed signals, always go with what the higher one is saying until they line up again, right? Whether that be, this giving way to, a continued bearish run, which might result itself in like the weekly breaking structure, or this reversing. But it's okay to go with what the higher time frame says. It's also okay to stay out of the market, right? So this whole month, I would say, like, man, I mean, this is the last week of the month, right? And I think I've maybe taken 6 trades, maybe 7 trades this entire month. It might not even be that many, especially on my real accounts. I probably have taken 4 and then a couple on some funded, right? So like I'm not taking a lot of trades, so I'm really looking to give for the proper setups to give me what the market wants to show me, right? So I'm not you know rushing things, or I'm not trying to find just any market movement to get in the trade. I'm waiting for the market to show me exactly what I want to see, and then I'm hopping in with those things when necessary. So that's what I'm looking at on dollar. So we'll see. Let's go ahead and go to euro. Euro futures. Euro futures is an interesting one because coming into the week, what I said I wanted to see happen was this. I wanted to see the market kind of respect these levels here, and I think this was the level that I said I wanted to see respected, which was like a daily fair value gap, something like that. Yeah, like this. And really kind of go down. And we obviously didn't get that. So this is ideally what I wanted to have seen, is us retest this zone and then really kind of fall over. We did not get that. We ended up actually breaking structure in the daily, just like on dollar, right? We broke structure on the daily, but the weekly is still bearish, right? And so again, there's a couple of ways on how to play this, right? My recommended way is just kind of waiting for the daily and the weekly to line up again. But there was a couple levels here that let me know that we could reverse, right? And so the first thing is really us trading into this volume imbalance right there. Again, the volume imbalance is going to be a gap in between two candles, right? So we traded up into that, respected that level. We also have this huge order block here that if I draw the kind of the high to the low, we're still way under consequent encroachment of that. So it's a good sign there. We also traded back into this. This is a weekly inverted fair value gap, right? So all these things are kind of letting me know that bearishness is still on the table for this, for Euro futures, or I guess if you trade Forex, it would be Euro USD. But we got to see some type of transition back into a downtrend on the 4-hour time frame. So until this happens, I have to stay with the long bias here. But ideally, what I would like to see is this at some point this week break structure and continue back down into the overall downtrend. So one of the things that you have to kind of realize as a trader is you have to, again, trade what you see and not try to over anticipate things. And for me, one of the things that I've done over the past few years is really just, again, I sit markets out until I'm cool with them. I might trade a couple examples for my students just to kind of give them examples for things, but for the most part, if I'm trading real money or real funded accounts, then I'm staying out of the markets until I get some type of confirmation with things are aligned. And I like to take trade setups that are based on the higher time frames. So ideally, again, right now this is telling us we just had a daily break of structure. We got to really go with the idea that this is going to continue to rise. But I think at some point, this will transition back into that downtrend. This could be the key level right there. If we take out this level here, up here at 1.067, I'm going to really start looking at the idea of this going back long-term bearish. Right now, I think we're long-term bullish. Right now, I think we're short-term bullish, just because we've done this. But I could see us going higher. So until we get a concrete break of structure in the 4-hour time frame, I got to keep riding with this bearish bias, or this bullish bias that we're getting. I'm sorry. So again, trading, when these time frames don't match up, you're aligning a couple of different ideas, and you're kind of making sure that you're still seeing the picture in a bigger perspective. So as of right now, if I go to the hour, I would want to see something like that break this low right here at 1.048 to really transition back into that downtrend. But I'm also not gonna again be taking any positions until things line up or I get more confirmation that this bull run is going to be the longer term run. So it's okay, again, if you're looking to take short-term bullish setups, just like if you're looking to take short-term bearish setups on dollar. But again, you kind of have to remind yourself that we are still very much in a downtrend, right? Like this bigger picture is still very much bearish. Matter of fact, in the last 4 months, we've only had October, November, December, January. Yeah. Last 4 months, we've only really had 3 bullish weeks. And we're trading back down. We're trading back into a liquidity marker that we just violated. So to me, this kind of screams inverse. Like this is going to be an inverted fair value gap. Oops. Especially because that order block is sitting right there, right below, right at consequent encroachment. I would not be surprised if we get something like this next week. We just tank. So yeah, so that's kind of what I'm thinking for euro. Let's go to pound. Let me go to the comment section really quickly. Okay, so we got some people from Northern Ireland. Shout out to Northern Ireland. That's what's up. Johannesburg, South Africa. So we're global. We got people from all around the world. This is awesome. I love seeing that. Okay, so what are we looking at? British pound futures again. If you guys are forex traders, this is GBP USD. I'm a futures trader, and that's why I'm saying 6B1. Such an ugly name, right? But okay, same thing here, right? So we traded back into this order block on the weekly time frame. Again, I did call out bearishness for this. Like I wanted to see this go down, right? Come into this fair value gap here and then go down. The difference here is that we slightly inverted this fair value gap, just barely. And when things usually when you see inversions, like disregardings of fair value gaps, you want it to be very convincing. You want it to have a lot of displacement. Like it just says like completely fuck this, right? Like, and it's just going straight for, it's closing well above these highs. When it inverts like this is kind of still a toss up, right? Because we very much, and I could raise that up a little bit, but we very much could respect this order block and keep going down. So ideally what I'll be looking for is, well, let me go back up to the weekly so you guys get the bigger picture. We totally inverted this gap here, right? And then we came back up into this order block / propulsion block, right? And the thing that I'm watching here is the wick, this wick right here, this weekly wick. And I treat wicks like gaps, right? So we're still under consequent encroachment of this wick. And so to me, combined with the order block is telling me that we still could be bearish. Again, when we're trading off these higher time frames, it takes a few weeks for these things to play out. So we could see a short-term bullish move, right? We could see the market run up and maybe grab highs or something like that, the high of last week, etc. And then cause it to still continue to go down and respect this. Or we could just fully invert this. So the levels that I'll be watching on this daily time frame are how price reacts again to the retest of this, right? If we find ourselves closing the week underneath this fair value gap, then I'm gonna really be looking to be aggressive with shorts, and I think we'll probably come back down to the lows and continue the bearish trend. If we have a hesitancy to really get below consequent encroachment on the daily, like we're wicking off of it heavy when this retests this zone, then most likely we're going to continue to go long, right? If we just see a bunch of wicks off of this and rejections from this level, or if it even doesn't even get down there, just really struggles to really even break down to this level, then I'm looking at, this will probably be kind of like my sign for a short-term bearish reversal, and I'll be looking at taking things to the highs. So very rarely do I ever come on here and say like I'm looking at things from both sides in terms of like I'm gonna go long or go short. But I think British pound, ultimately I want to see this continue to respect this gap and then go down. But if we get a very like a close above this, like a significant close, right, and retest above this fair value gap, then I might be looking at this to go long and kind of take things the other way. I think that's 2480. So it's about 100 points from this fair value gap to that high. So this is kind of, again, this is a very tricky trade. I would have or tricky, I guess, market, I would have preferred this fair value gap to have closed like significantly above, something like that, right? Like not just maybe 10 pips of points above, but like something really noticeable like that. That way it would have like confirmed that this is an inversion, and we would have been, more likely to just say, okay, cool, this is the bias. We're going to go long probably this week short term, and then I'd be looking there. So again, I'm not a huge fan of counter trend setups. I would really rather trade in line with, I think my best trades come when the daily and the weekly are aligning. And that way it kind of gives me a lot more clarity on what to expect. But when they don't, again, you can sit things out till they align again, whether that's for bullishness or bearishness, or you can really frame things out in a smaller time frame and make sure that you are doing your thing, and just taking very small setups and kind of basing it off smaller time frame draws and liquidity. So that's what I'll be looking at. I also think I had a chance to look at some of these other ones too, like New Zealand futures and Australian futures. And I think there's a really good chance that this could still turn over and go bearish, right? I think based on these time frames. These are some things that I drew out a couple weeks ago, and they're still kind of playing out. So I would not imagine, I would imagine that this could potentially still turn over too. So we're still in that fair value gap on the weekly there. So I look at a lot of these different things, a lot of different currencies to see, basically how we could, move, because all of these things are going to be correlated. So, someone said, where am I from? I'm from Michigan, man. I'm from the United States in Michigan. It's yeah, there's nothing really crazy going on in Michigan. It's not as dope as the UK or South Africa, right? So, but yeah, born and raised out here. So, let's go ahead and go to NASDAQ. I actually had a really good week on NASDAQ. If you're in my community, you guys saw, that's the fun. I keep a demo account open. That's funny. This is a paper trading account that I have open. Log out of that. But I usually use paper trading accounts to, like, when I hit my goals for the week, I act really crazy and stupid. I tell this to my students all the time that, like, I think one of the reasons for my success over the past couple of years is that I get into the markets, take my trading setups and get out. And then if I feel the urge to trade again, I open up a challenge or open up a paper account and just act a fool, like act real crazy with it. And it kind of gets that urge of like wanting to take positions out, right? And kind of overtrade. But anyway, so coming into the markets, what we saw last week, and I actually had a really good week trading NASDAQ. My students saw that I had I think it was a $6,000 trade this week, trading trading MNQ. And so what we wanted to see last week is on the daily time frame, we saw this trend line liquidity builds up, and you guys know, my students know, this is one of my favorite kind of looks when we see trend line liquidity, because we know the market has a strong probability, especially when it's counter trend the overall trend, that there's a really strong possibility that the market could go up. And so I came into the markets. I think the trade I actually took was on Tuesday. Yeah, Tuesday. I ended up catching a lot of this up and closing it pretty much at the high of the day. And it was a really good PM session trade. Again, I think for about 6,500, I believe. But yeah, so coming into the week, what we saw here, what we wanted to see was the market really continue to go higher and really start to attack these highs and find reasons to, come up here. And this is going to be our overall target that we want to see the market run to over the next, couple of days to a couple of weeks, right? And what we actually got was, again, we had a few days of bullishness to kind of meet to that trend. Coming into the Thursday and Friday, the things that I saw that really caught my attention is that we set this initial high on Wednesday, right? We came up and formed these relative equal highs right here. So this is telling me that there's going to be a bunch of traders here that have their Stop losses above these highs are going to read this as resistance, and we want to attack that, right? So coming into this week, there's a couple things that we closed out the last week or this past week having. We inverted this fair value gap here, which was a very good sign. Style, visibility, orange. Let's make that a IVFG. So we also came back down into this zone, retested it, and it's also overlapped with a actual BISI right there. So really good price action that we saw here. We swept the low of yesterday as well. So ideally what I want to see here is I want to see this market potentially retest one more time. Best case scenario, retesting one more time, maybe even sweeping the lows of, Friday and really start to run towards that high. Looking at this 4-hour time frame, just the market failing to get up here a couple times really lets me know that we could, see a run back up to these highs. This high is lower than this high, and then this high is really respecting that. So I think there's a lot of money sitting up here that we could go get next week. Go down to the hour time frame. And what I'm going to be looking at, actually, let me jump back up here. What I'm going to be looking at long term is how do we react to this zone right here. And I'm going to make the note here that I say I want this to invert, right? And once we get above this zone, if we fail to respect this, once we get above this zone, I'm looking for buys, right? I'm looking for buys over this level. Anything above here that I can't really call for buys just because it's a very heavy bearish zone, and it's a huge SIBI. So ideally, I want the market to really continue to go higher. So again, anything over 21,996 is where I'm looking to buy. I'm also not really looking to short this, to be honest with you. So I'm looking to really see how this plays out, and if we get any type of reaction or disrespect to this level. So that's what I'll be looking at. Ideally, I want the market to really run back up here, and it could go deeper. It could retest, this gap, or really even dig down even deeper. But I think ideally, I want the market to continue to go up and go from there. Let me look at ES. But yeah, I had a really, really good week trading that this week. I think for the month of January, I think I'm somewhere around 20 something up for the month. I can't really remember, 20 something thousand for the month. So it's been a really good January. This has probably been my best January in recent memory. But yeah, same thing with ES here. I actually love ES a little bit more than NQ, only because if you look at NQ, let me see if no, never mind. The reason, if you look at NQ, if we go back there really quickly, NQ did not fully invert this huge fair value gap up here, like this daily fair value gap. So we're still, all of this price action is technically still happening inside of this zone here. And in theory, we could short this, still could fall over technically, right? But if you look at ES, we actually closed well above that zone. And I actually think ES is probably the better setup, only for that reason. It's more confirming bullishness. So ideally, what I want to see is the market run up and grab this high right there. So something like that. And so we're pretty much bouncing. Yesterday's candle, or I'm sorry, Thursday's candle inverted this, retested this inverted fair value gap. So ideally, I want to see the market continue to run up. We could see another retest. We could get even as deep as this fair value gap in there, which sits right above consequent encroachment. But ideally, I want to see this market continue to go up. So ideally, best case scenario, we do something like this. We come down there, trade to like best case scenario, we come down to this zone right here. We wick off of it. We potentially even respect consequent encroachment. And then, things start to turn around bullish from there. I won't really be looking to trade anything until we get that. We're still technically broke structure off of this, trading down into this order block here. So ideally, I'm looking for the market to retest this gap at least one more time and then give us some bullishness out of that, and then take things to the high. I think definitely this week we could see the market grab that all-time high on ES. And then lastly, I want to take a look at YMCMB. Where did YM go? Drag this up here. Let's see. So this one, again, you guys know my thoughts on US30. It is a little crazy, and I don't like trading it, to be honest. We traded. So here's the thing: we violated. Actually, let me get rid of some of this. So coming into last week, I said I want to be bullish above this fair value gap, right? Is what I said. And we basically got that. So we also disrespected the consequent encroachment of the order block here as well. We're trading back into this fair value gap. I'm looking for bullishness. I'm looking for bullishness again. This is going to be the target. These relative equal highs at the all-time high. And what I want to see happen is what do we do here? We inverted this gap. So potentially coming back down, retesting it, and then taking things to the high. I am wary of that we're sitting in a second SIBI right there. So this thing could fall over still, but I still would be looking for opportunities to go long if I was trading. So potentially maybe even coming back down to here or this fair value gap on the 4-hour. So again, the level that I'm looking at is 44,030. This is best case scenario. We could even get something like this where we kind of have an inside day on Monday and then trade back down into this fair value gap right there. Like that. Ideally, though, that's kind of best case scenario would be here, coming back down to retesting that gap, maybe even getting as far as that secondary gap inside there, picking up those orders. But I also would be looking to see how we react here too. At the end of, I guess technically Monday, yeah, coming in here, because we even are failing to really even break through this, then we could just see things turn around right there. Again, I'm not a huge fan of US30 or YM. It's just not the one that I like to trade. But I wouldn't be surprised if we did see something like that. So that's all I got for you guys. I'll stay on for any questions. Do I use SMT when trading? Someone actually just asked me this last week. They asked me if I use SMT when trading, and I don't use it as much. I probably use it. I use it in the sense of like, I'll look if I'm in a trade, let's say on dollar. I'm sorry, I don't trade dollar, but if I'm on a trade, if I'm looking at euro, for instance, let's say this is euro USD, but for me, it'd probably be euro futures. I would be looking at the whole time I'm in this trade. Let's say I'm in the trade for bullishness to, I think we're going to take these highs out, right? The whole time I'm looking at dollar to see if is dollar going lower, right? Is dollar going lower? Is dollar going lower? Is it making lower lows? And if it's not, that's going to be it's going to be a red flag for me in the trade, because why is, dollar not going lower when euro should be going higher? Or if they're both doing the same thing, right? Like if euro is going higher and dollar is going higher, that's a red flag to me. So I don't want to be in those trades. So if I'm looking at British pound also too, it has the same correlation as euro. So if dollar's going up, both of those should be going down, and vice versa. So if dollar's going up, British pound is going down, euro should be going down too. So if I see a scenario where dollar's going up, British pound's going down, and euro's going up, it lets me know right then and there that euro, maybe I should look at GBP versus pound, or GBP versus euro, because it's doing what it's supposed to do and the other one's not. So that's how I use SMT. But I know there's like more examples of like people using SMT for like higher highs and higher lows. It's kind of the same idea. Like they'll, if you're looking at indexes, you might see like if NASDAQ fails to make a higher high and ES keeps going, it's letting you know that maybe the whole market is about to reverse and you're about to get maybe like a turtle soup or something like that on the other one that's digging a little bit further. But yeah, so I kind of use it. I just don't call it out or teach it really. But it is something that I think about when I'm in my trades, I guess. Someone said, let's do gold. I heard gold had a crazy week last week. I'm not a gold trader. I actually don't like gold at all. And I've said this multiple times. But weekly time frame here, the things that I would note is it's bullish, right? Obviously, we're heading for higher highs. The things that I would know is we failed to, we were pretty much close at consequent encroachment, just a little bit above. So in theory, this would tell me that we do still want to keep running for highs, but it's very close, very tight. In trading, you gotta leave yourself a little room to color outside the lines. So like even with that fair value gap example that I showed you guys, we're technically inverted on pound, right? But it's like it's very close to the actual gap. You got to give yourself a little bit of like breathing room there. So even with scenarios like this, it technically closed above consequent encroachment, but it's very close. So don't be surprised if the market tends to just wick off of this and then just drop. But as of right now, if we get a close, like a daily close, like above this, like in this range, then I'd be more leaning to this going up higher. But so as of right now, I'll say we're over consequent encroachments. That's a good sign. We know this is the all-time high right here. Ideally, I would like to see the market do something like this. Be respected that gap there. So I would say I would want the between Sunday and Monday, or Monday and Tuesday. I'm sorry, the close on Monday is going to probably present an opportunity for another fair value gap, right? So let's say Sunday, something like this, or Monday, something like this, right? And that's the low on Monday right there. So ideally somewhere between there and the close of this candle on Monday and Tuesday, I'd like to see this market really set the low, come dig in here, and then continue to take things on. I would be looking at a couple of levels. First level is the high of last week. It's 2,785. I'd also be looking at, change this so you guys can see better. I also would be looking at the high of, the all-time high, which is up there, but I'd also be looking at consequent encroachment, right? So I'd be looking at consequent encroachment of this wick right there to see how we react. So these are the two levels, again, that I use consequent encroachment as 50% level of the wicks to see how we react. And the only reason I'm marking it there is just to see if we have a hard time getting through that. Because if we have a hard time getting through that level, then it could signal a reversal. And a strong close above it could signal that we have a higher probability of taking out this high. And this high is so close to the all-time high that I would not be surprised if we ran there and took that out too. So that's how I read it, but I'm bullish, right? I mean, I don't think you can really bet against what's going on right now. Makes a lot of sense. It's a new administration, so there's a lot of people that are nervous, so a lot of crazy things going on in the world. So yeah. Should trading fit your lifestyle? So trading should, I mean, if you are serious about your craft, then at some point, and it depends on what you want this to be, right? There's some people I know that they just want to make a couple $100 a week, or they want to make $1,000, like something small where they can still, continue doing what they're doing in their job, right? But then also have just a little bit of extra money coming in, right? If that's your goal, then yeah, I mean, you don't need to change your lifestyle, right, for trading. But maybe you need to make trading fit your lifestyle, and not the other way around. But if you are someone that wants to do this full time and you want to be a like full time trader, or the majority of your income is coming from trading, then you need to change your life to fit around trading. And so for me, I used to trade London session heavy when I first graduated college, got a real job, right? And that did not work. I was staying up till 2 in the morning, and I'd have to get up at like 6 or 7 to go to work, right? And it was like, it was not fun. And so when I got to, thankfully, when New York session became a thing, or for me at least, and like stuff like TradingView and all stuff like that allowed me to kind of change the way that I trade, and really fit in more with like PM session trading. And so right now I work a job that is remote, right? Everybody knows my story. Like I'm not a full-time trader. I trade. I have crazy days trading, but just for me mentally, I found that when I have a secondary source of income, whether that's job stuff, whether that's entrepreneur stuff on the side, right? Like it allows me to be way more focused when I'm trading, and I can take bigger risks knowing that like I don't have to not eat if I don't. And at some point I'm going to make the transition to full-time trading. I think maybe I'm really going to see how this year goes. But just it's a psychological thing, which is okay, and don't let anybody ever shame you saying like you can't be a full-time trader and not um and work a full-time job too. You can do that stuff. You just need to change your job to fit around it. So if I was you and you were looking to be serious in this, um I would definitely find a job where you can work remote, right? Or you can find a job that you work hybrid. Or if you're going to be a New York session trader, like figure out the session you want to trade, the session that you're good at trading, and then you work your life to be around that. So maybe it's like getting a second shift job, or maybe it's a remote job if you work in corporate America, right? So it's one of those things where this is a process, it's a journey. And I just told one of my students that this on like last week, because he's very adamant about trying to speed up the process. And there's so many things that need to align right with trading, right? You need to be able to learn, right? The actual what you're seeing on the charts. That is a multi-year process. It's like a 1 to 2 year process that you need to learn about what you're doing wrong as a trader, right? Like you need to figure out all of the risk management and emotional things. That could take another year. It could take a long time, even if you're very hard-headed. That's always a constant journey. And then you need to figure out how you're going to be able to do this full time, right? Or if you're going to be able to do this part time, or what that looks like for you, and how do you change your life to fit around it. And that could take a year, right? Because if you want to, let's say you want to trade London session, or New York session, but you work 8 to 5, you got to find a job that's either going to let you trade at work or work remotely so you can trade, or a job that's outside of that time. So um, it's a multi-year process. There's a lot of things that need to line up. And I think the problem is that people are thinking in terms of 1 year goals instead of 10-year goals and 5-year goals. And so I'm trading for 2030, right? Like I'm looking at like where I want my life to be in 5 years versus where I am now, right? And so even if you just have like a $5,000 account, or a $100,000 funded account, or $50,000 funded, whatever, right? Like you need to be able to look at that and say, okay, how can I grow this over 5 years, right? Because you guys are trying to be millionaires overnight, and you take a $5,000 account, $10,000 account, you're trying to flip that into job quitting money ASAP. But if you were to say, I'm going to take this and build this up over 5 years, what would you have, right? And the time is going to come regardless. Like 5 years is going to pass whether you stick to your goals or not. So it's like, where do you want to be in 5 years, or a year or 2 years or 3 years, right? So it's just take your time and just figure out, um, figure out what it is that what type of trader you want to be. How do you handle trades emotionally? What markets you want to trade? How are you going to make trading fit in your life? It's a process. It takes a long time. It took me the better part of 10 years, right? Like it was like a 6 year journey for me. And obviously I didn't have a lot of the resources that you guys have. So I'd hope your learning curves are slower, but it took me a long time to figure this thing out. Right. And don't stress out if you are going through that too and you don't know. Cause I mean, it took me years to figure this out. And I just made 20 grand this month. So it's like, it's not even, and that's 20 grand over very little actual like trading time, probably like 5 trades this month, 4. So it's not something that you guys have to figure out ASAP, but just let the process come. Treat it like college, right? Like you go to school for 4 years, or high school, you go to school for 4 years to learn how to do a high powered skill, right? That'll pay you some money. Treat this like that. Treat it like 4 or 5 years of you just learning and not being eager. So, so someone asked how long I've been trading. I've been trading a decade, man. I've been trading I first learned about Forex, right, in 2014. I was involved in a bunch of network marketing companies, and I was doing a bunch of sales. And one of the people in that told me that I should be able to check this thing out called trading, right? And I thought it was just like trading stocks, and I was like, that's cool, but I feel like you need to have like a lot of money to make stocks, and like I don't really understand it. And then fast forward like 3-4 months, like I'm like all in learning this skill. And um it was an up and down journey. I would say the better part of like 5 years was up and downs. And I would win some trades. I feel good about myself. Then I'd lose some trades. Then I'd maybe like win a couple like more, and then lose a couple more. And I wasn't profitable, right? And it took me a while to get profitable. And I think a couple of things that made me profitable is stop trying to rush things. Getting a strategy that actually worked, getting a mentor that actually traded live with me, and actually I could understand their thought process behind the trades, because I can teach you how to draw, I don't know, a higher high, higher low, a fair value gap. But understanding my thought process when I trade is something that you can't just teach in a video. It's something you can't just teach in a video. And it's one of those things where you have to see someone think their way through a lot of this stuff on a multiple times. And I think uh a year of that changed my life for sure. But yeah, ever since then, it comes, you get confidence too with trading. And once you start understanding that you really understand the markets, and you understand yourself, and you know what you're gonna do and what you're not gonna do, like the sky's the limit, dude. The sky is the limit. So can you trade one forex pair and one indices pair, and become profitable? Yeah, I mean, dude, you don't have to trade a bunch of things. Like, I'm gonna be honest with you, I only trade like, I'd say the majority of my trades, I'm only really watching three things when I'm trading. I'm looking at pound, euro, and NASDAQ. Those are the only 3 things that I really trade. And so, and half the time, I'm only really trading one of those a week, where I'm looking at one good setup. I'm not trading all those at the same time. You can become rich. I don't want to use the word rich, but you can become profitable trading one thing. Like, if you guys follow people like, I don't know, like Q Banks, right? Like Q Banks trades US30. That's his baby. Or like other traders just trade NASDAQ, or other traders just trade, like one thing, right? You don't have to trade a bunch of different things. You don't need to have a bunch of different assets. You literally just can have one thing. I know plenty of people that just trade one instrument, and they just wait for their setups, and they wait for the next thing to happen, and they take it, and they get out, right? Or they hold it for the swing, or whatever they're doing, right? But they're not trying to trade a bunch of different things. And to be honest, I'm not built to trade a bunch of different things. I think I got ADHD like 8. mug, right? And I'm and so sometimes it's hard for me to focus on multiple things at once anyway. So it's like even with my students, like I try to only really have one chart up when I trade because I I personally am not great at focusing on a bunch of different things at once. I can kill one thing at a time and then move on to the next thing. And but I can't do more than one thing at once. So what's your advice to someone who's in thousands of dollars of debt from trading and needs to pay that money back? So I'm going to be honest with you. I think that you should stop trading because something's not working, right? Like stop trading, go get a job. If you have a job, cool. If you have a better job, like, but something you're doing is not working. Um, I don't know if this is you or if this is somebody else, but I would ask, and maybe if this is you, if you don't mind sharing, like how long have you been trading for? And if you are in thousands of dollars of debt, the process is not working, right? You keep losing. So that's either something with your technicals, right? It's either something with your psychology. And the bigger the hole that you dig, right? The bigger the hole that you dig with trading, the more you're going to try and want to get it back all in the same day. And that's the problem is you're looking at how much money you've lost and you're saying, oh, I got to get it back, which is a very human thing. Like you're not the only person that's ever done that, right? Like I've done that. I still do that sometimes when I take a loss. Like I might still think about how much money I lost, but like you have to kind of forget about that money. Once that money's gone, it's gone. There's this, something that helped me change my mind on or change kind of like change my perspective on trading was when I went to business school. You learn about obviously you take like economics classes and stuff like that, but you learn about this rule. It's called the sunk cost fallacy, right? And so basically what that means is it's an idea that a lot of businesses, because we're not the only people that do this, traders, but like people who run businesses do the same thing, is a lot of times people make business decisions based on the money they've already spent that they can't get back instead of doing what's the next best thing moving forward. So for instance, like a business might say, we invested $10 million into this structure, but now nobody wants to work here. Everybody wants to work from home. But because we spent all this money on this, we need to keep people coming back to the office or something like that. I don't know, something crazy like that, right? But like that's not the best decision for the business. The best decision would be to sell the building and then move on and use that money for something else. But because you've already spent that money and lost that money, you are you're making business decisions on the money you've already made or already lost that you can't get back, right? And that's not good. And it's the same thing with trading, right? Like you've lost thousands of dollars trading. And so you're making your future trading decisions trying to get that money back, if that makes sense. So what you need to do is stop, right? And realize that you are not going to make that money back. Whatever money you might make more money, right, in the future, but the thousands of dollars that you lost from trading is gone. You're never getting it back. And that's money's gone. And you need to like be comfortable with that because the more and more you try to get everything back in one trade, because you're probably, if I had to guess, you probably are thinking about the number when you trade and then you start to get up a lot and then you think you can make more back, whatever you lost for the day, week, month, year, or whatever, and then you try to full port it, right? And then try to get more money back all in one day or all at one time, and then you probably end up losing more because it starts to turn against you. So it's just a cycle of losing more and more and more and more, or your strategy is not right and you're just looking at something that's completely wrong. But either way, stop. Take a break, right? I don't care if you take like a 3-month break, a 6-month break, a month break, whatever. Get away from these charts, break things down again, and actually journal your stuff and be like, why am I losing this? Go back to just watching the market, right? Watching the market. Like it'll just be you and your computer, right? Nobody will know, right? Like watch the market. Don't trade, don't hit a demo, don't hit a Don't hit a button, right? Like just sit back there and just watch the market and come to your session every single day and be like, I think the market's going to do this, and draw it out, right? And if you can't be right when just with just projecting with no money on the line or not even a demo trade on the line, you're never going to be right with money, right? So sit up there and just watch the markets for a couple months, right? Just a month, two. You've spent 4 years doing this, it looks like. So what's 3 months, 4 months of just watching the market and coming into their terminal and saying, okay, I think the market's going to do this. I think the market's going to do this. I tell my students when they first start trading, like, I taught you this information. Your first inclination is going to want to go put money on this and go try and make money live. And that's the wrong thing to do. Sit with these markets for 3-4 months and just watch and see how they move. See how they move during the time windows that we were supposed to be trading. See how they react. See when you're wrong. See when you're right. Write that down. Take notes, right? And then you start to get a better feel for things. When you can predict things when there's no money, no demo on the line, then, and you're consistently saying, okay, the market's going to go to this direction, or this is where I would have entered, draw that stuff out, and then move to a demo at that point, right? And do that for another 4 or 5 months, right? Just demo, right? Or longer, right? These numbers are arbitrary. These numbers are till it works, right? And then, if you make the decision to go live after that, but you need to have a track record. Like if you were to go get a job at a hedge fund, nobody is going to give you a job without a track record, right? If you want to go work for like a firm, like a real prop firm, not these prop firms online, but the actual real prop firms on Wall Street that hire traders to come in and trade for them and pay them salaries and stuff. Like if you were to work for them, they would ask, what's your track record? And you need to ask yourself that, like, what's my track record, right? Like before you fund yourself, like with your own personal money, like what's my track record? If you can't be profitable just watching the charts, or you can't be profitable in a demo, you'll never be profitable. There's nothing that magical that's going to turn on when you start trading money for real. So take a break. I would say look at your strategy, look at your person, look at your own personality, and see what's going on. Am I just losing these trades because the analysis is wrong, or am I losing these trades because I'm just impatient? Like really start to detail what's wrong with you as a trader, and then come back and game plan it up. And also, if your strategy is wrong, find a better mentor, right? Like a lot of times mentors are not, they give you something that they sell you a course that they've really just heard online, and they don't have any actual trading skills or ability. They just kind of fake stuff, especially if you guys are trading with MetaTrader. If your guru is using MetaTrader 4, there's probably a strong possibility that they might just be faking everything. So, and they're not trading live for you every day, like, then, or most days, or not willing to do that, then there's probably something wrong with them. I would say also to message me too, man. Find me on Instagram, Bricks Trades. And send me a message. We'll talk more about it. Maybe I can help you out. GBP and NAS are my most profitable pairs in trading. Everyone is using SMT, both, but I want to use it at all. So my thing is this, dude. I think because you asked me a question very similar to this last week, and I think you're basically asking me if it's okay, and I would say like it's your strategy. Your strategy. You should know what you're doing. There's thousands of ways to trade. There's people that used, when I first came in, there was this thing called the market maker method with Steve Morrow. There was this guy that trades animal harmonic patterns like a bat. There's guys that use support and resistance. There's people that swear by supply and demand. There's people that use indicators. There's people that use EMA crossovers. There's people that use MACD, TSI, RSI, TDE, whatever, right? Like they use a million different ways to trade. Ballinger bands, TDE, OVO, like anything, right? Like they use anything with an abbreviation to to find a way to get into a trade. There's people that I know that use the moon, like they literally use the moon patterns and like the its effect on the earth to figure out when is a good time to trade, which is the dumbest thing to me. But there's people that use literally any single thing you can think of to trade. And you got to be confident in what you're seeing. I think you need to turn off social media because I think this is the second time you've said, like, I came in here and I see people doing stuff, and I could be wrong, but I think we talked about this last week. But there is something that's going on within you that, like, you are looking at what everybody else is doing, and you're just kind of like, I want to do that, I want to do that. But it's like, if you're profitable, I could give a damn what everybody else is doing. Like, to be honest, I have a strategy that works for me, right? And it's been working for a while, right? And obviously, your strategy is going to have periods of drawdown. There's going to be times where you're just going to lose. There's times where I do everything in right and I still lose. That's why you manage your risk, right? But you can't look at what everybody else is doing and say, I'm going to do that. I'm going to do that. I'm going to do that. Because at some point, you're just strategy hopping and strategy chasing. So, but I would say, in particular to this question here, SMT is just something that is, if what you're doing is working, right, then why add something else to it, right? If it's not working, which it sounds like you might not be profitable, just add like in the long term, like these might be your most profitable pairs, but you might not be profitable overall. But don't worry about what everybody else is doing. If what you're doing is truly working, and you look at the end of the week and the end of the month and you're up money, right? Like every month, like, or consistently, right? May not be every month or every week, but like every at the end of the year, you're looking at your P&L and you're like, yeah, I won this year. Like, I made, at the end of the month, at the end of the year, I'm making money. Then don't worry about what everybody else is doing. I would say, like, SMT is just it's a tool. It can help for sure. But if you're having an issue being profitable, then I would look at your strategy overall and I would say, okay, cool. What's wrong with my strategy? What could be potentially wrong with me? And if it's my technicals and my technicals aren't good, then let me go back to my strategy, or let me find somebody that I can learn their strategy top to bottom and watch them do this live every day or a few days a week so I can understand their thought process, because that's all it is. But I would say SMT, it helps for sure. I'm not gonna lie, like, knowing it helps, but it's not like I don't use it that often. I'm not like consciously using it every single time, if that makes sense. But yeah, like I said, and I think a lot of it comes down to having a good solid mentor with a good solid strategy that teaches you how to do it. So that's all it is, man. I mean, I'm not trying to rain down on you, but yeah, it's, just, if I could turn off the internet, I would probably do it, because all it does is make you compare yourself to other people. That's all it does. I started this year with a $10,000 trade, and I looked online and someone made 20,000, right, in the same trade, same day. And all of a sudden, my $10,000 day, which would probably take me a long time to make at work, right, just became not as good. So it's like, you know what I mean? So, like, you can't compare yourself to other people. Now, if you're not profitable, that's the different story. Like, if you're not profitable at all, or if you're just not consistent or comfortable, right, then that's a problem. And I would say maybe you need to go back to strategy, you need to go back to mentor, you need to go back to your emotional or risk management strategy. So I would say also find me, right? Like, again, same as the last guy, find me on social media and maybe we can talk about it a little bit more. But I think only reason I'm bringing a lot of attention to this is because there was a time where I was very much the same way. Like, I very much um strategy hopped. I would go online and I would see something new and I'd be like, oh, I need that. Or I'd see one person who seemed like they just made a lot of money, or they seemed like they had their together, and then I would try and copy that, right? So I would I would just implore you to maybe turn social media off, find one or two good mentors that are good at what they do, right? And they have a proven track record. Um, and then really study them, study the strategy inside and out, learn how they trade, right? And success is not necessarily guys on the internet with Lambos, but like they can break down charts more. Like if you see a guy online and he's driving a car more than he's posting his charts, then he's probably not legit, right? So find a good strategy from a good mentor who will teach you the strategy and then also teach you how to trade it live and the thought process that's needed. And um, yeah, and then just take it a day at a time from there. But strategy hopping and going for the next shiny ball does not work, So, and that I probably wasted. It took me like 5-6 years to be profitable. I probably wasted a lot, at least half of that time on strategy hopping because I didn't have a good mentor, and I had pieces of the truth, but I didn't have the whole thing. So, but yeah, I'll stay on for. I got a couple more minutes, so if anybody has any other questions, we got like 36 people on. I'll be happy to. Also, if you guys, I talk a lot about courses, so this is also the shameless plug for my course. So recently, if you guys are subscribed to me on any platform, do that because I post a lot of trading content both in my Telegram, which I'll be shutting down, moving everybody to a free Discord in the next couple of weeks. So be on the lookout for that. Actually, probably the next week or so the Telegram will probably be no longer good, and I'll just be running everybody to Discord. But I also have a paid course on that Discord as well. It is called the Profit Playbook. And I'm going to post a link to it right here so you guys can have access to it. But basically, it is a really comprehensive program that is a actual video course with hours of video content recorded, and then also a live Discord for community, which you probably hear it chirping in the background right now, and then also the live trading aspect. So I talked about too. So this year I'm going live at least 2 to 3 times a week, just pulling up different trading scenarios and different markets, mostly going to be currency futures, but also we'll have NASDAQ open there as well. And basically just I want people to not only get the strategy but learn how to apply it as well. And so it's not a signal room. I'm not doing it to shout out trades or whatever, but really so you guys can see my thought process. And I'm thinking of it more as an education room, where you guys can come on and see me think my way through trades, see me take losses. Like we took a couple of losses this week. I think one loss for sure on the charts. And then obviously came back and made the 6,500 later on that week or that day. But it's one of those things where you got to see the strategy, see someone think their way through it, because just drawing lines in a chart doesn't mean much unless you have a narrative behind it. So hopefully you guys get a lot of value out of this. And yeah, but I'll drop the link here. And so check it out. I'm really confident in my ability to teach people. So it's a 7-day free trial. So you can literally jump in now today and not pay anything. And you guys get access to everything. And so again, I just want to be able to share all the knowledge that I picked up over the past 10, from trading, and hopefully make people's journey a little bit shorter. So hopefully you guys enjoyed this. Again, I got a couple minutes for questions, so stay on the line and ask a question if you got it. Otherwise, we'll probably call the call at 11:30 if I don't get any questions. So about 3 or 4 minutes. Okay. We got a minute left, so if we don't get any questions in here, I'm gonna go ahead and end the call. But yeah, I mean, I hope you guys have a good rest of the week, and I hope you guys have a great weekend. Remember, study, but also go touch grass, man. Like it's a process, it's a journey. Treat this game like school. It's 3-4 years, right? If you say I want to be profitable in 4 years, right? And you take your time and you learn versus trying to make money for 4 years, right? And actually learn the skill set. This thing can pay you, right? And I'm not saying it will. I'm not saying it 100% will, because there's a lot of stuff that goes on between the ears. There's a lot of stuff that goes on between the charts, right? But there's a lot of opportunity here. So make sure you take advantage and learn, and don't rush the process, right? Take your time, enjoy the moments, because one day you look back and be like, I can't believe I did this, right? Like I look back at 2015 and all I wanted to do was just make a few $100s a week. I wanted to make $500, $300 to $400 in a week, and have that on the side so I can pay for my life or pay for a car or something like that. And yeah, I mean, like I said, man, I'm on my way to clearing at least 20 this month, right? And like this is just January, so it's one of those things where actually probably more than that, but whatever. Anyway, so there's really, this game can really change your life if you let it. And if you're patient, and the opportunities are out there, the resources are out there. I obviously have resources, but there's so many things and people that you can learn from, right? And there's so many ways to fund your trading that there weren't when I was 21, 22 years old, man. You can get a prop firm, get $1 million in prop firms for like $1,000 or something like that, or whatever. Like you can find people that will fund your trading. There's so many more opportunities than there were back in the day, man. So you should be happy that there is so many opportunities to get profitable and actually treat this like a real career versus like back in 2015, I would just see people online. I'd see 1 or 2 people online and nothing made sense. And then you find out that halfway through the time they were scammers and all that stuff like that. So just be thankful that you guys live in an era right now where if you're first getting to learn how to do this, that there's just so much opportunity. So I'm gonna go ahead and end the call. Again, find me at Brinks Trades. Again, any social media, hit me up on Instagram, hit me up on YouTube. Yeah, I'll catch y'all next week. Hopefully everybody has a good week in the charts, and go enjoy life, go watch some football, all that stuff like that. Peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from 1 lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.